Hey everybody, it's Jonathan Bolano with Bolano Home over at Keller Williams. I'm here with Jonathan Agudelo
Hey everybody, how you doing?
from North Point Bank and Mr. Then.
Millennial Business and Finance Coach.
Boom. So Mr. Then's here to talk to you guys, to share some information with you, some very useful information for those of you that want to talk about credit repair. But before we get into that, as always, if you are on Facebook, make sure to like us on Bolano.home. If you're on Instagram, follow us at Bolano.home. And if you're on YouTube, make sure to hit that subscribe button and then also hit that little bell so that way you get the notifications when we do post up a new video, so you get to be notified when that happens. Just so that way you guys have some insight. If this is your first time watching, what hashtag real estate talk is, it's just a forum for us to sit here and be able to exchange information with you guys without you having to sit in front of us. So Jonathan and myself, from time to time we have buyers that say, hey, I got work, I got this, I got that, I don't have time to go and sit down to get a pre-approval yet, I just have a few questions. Can I just call you? Well, this is one of the forums that you guys have where you can actually listen in on what other questions other people have, in addition to ask your own questions. As today goes, we are pre-recorded, so we're going to have to do all those afterwards. But nonetheless, the show still must go on.
And just adding to that point, this is a great place for us to answer your questions. If you have questions that you can't sit with us or whatever, but you can always call us if you have a question, a concern, or even something that you want elaborated on from these videos.
Or just drop it in the comments below.
Yeah.
You know.
And we'll check in this afterwards and keep it up in touch with you guys. And then we'll leave everybody's contact information in the description of this video too, so that way you can get in touch with us all. Moving forward though, one of the great things about this video, $250 Amazon gift card. A lot of you guys have been asking questions as to what that is. Mr. Agudelo, you want to jump in?
Yes, very simple, very easy. You share our video. Every time you share, your name gets entered into a bowl, a hat, whatever you want to call it. You pull your name out. At the end of the thing, you win a $250 Amazon gift card. The thing that I just said, it would be at the end of the quarter.
And what day is that?
It is going to be what? March what? What
31st.
March 31st, yes.
So at the end of this month, we're going to be running that raffle on the first Wednesday of April, which I believe is the 3rd, is going to be the day that we are going to present that information to you guys. And one of you guys might be here on hashtag Real Estate Talk with us.
Receiving your gift card, huh?
Yeah, and telling us about what you're going to spend it on.
Gifts for us.
Yeah, that's what I was going to say.
Well, speaking of gifts, I did bring a few extra things so that you guys can give away.
Yes.
I have a few different businesses, so I went ahead and brought some things over that you can give to
If you guys want those giveaways, you got them from Bolano, because I keep them all. That's what I do. No, I'm just kidding.
Actually, I'm going to probably do something on this anyways. I was hoping we could go live today because during the live video, I was going to have people just jot some questions or see if we could come up with something to see if we could get those popped out. But until we hit your point, think of a few questions that you could ask people for certain answers that we're not going to give the answer to today. And whoever answers the question afterwards, they can even Google the answer and such. But whoever does that first can be the winner of these two objects, which I will show you guys in about 5 minutes or so. But moving forward, let's see. Reminder, Bolano Home. What is Bolano Home? Bolano Home is your place for real estate. It's when you guys think of a home, we want you to think Bolano Home. And so we want it to be that one-stop shop for real estate as far as like education, looking to buy, looking to sell, looking for just a conversation. So definitely keep that in mind that this is the place to come to. We have all the videos. We're going to be putting up more and more content as the year progresses. Regarding all the different levels of real estate and what you guys need to know in order to go into the market as a smart buyer or a smart seller and understand all the decisions that you're making. So going from there, the next thing we're going to be talking about today is condos, because North Point Bank has actually come up with their non-warrantable condo program.
Yes, sir.
But before we get into that, what is a condo? Condo, it's a building just like any other, except it's going to be attached to many others. So it's basically a cluster of different homes that are owned privately. So you're going to own everything from wall to wall.
And
all right.
just to throw in on there, sorry, because people might have the question. You said attached to others, not necessarily physically attached to all the others, correct?
Right.
Just part of that community. So people, in case they have the question.
Close.
Sorry.
Yes. There's a community. And the cool thing about this community is that it actually may share a garage. It may share a pool area, a gym area, and other amenities. And all those are paid through something called HOA. So that's your homeowners association. And so you're going to pay roughly, I think around this area is about between $300 to $400 a month. And that takes care of all that. And so the benefits of this is that when you are part of this homeowners association, you end up actually spending a lot less than you would if you were to own your own single-family home and have to go purchase a gym membership and a gym the same quality as what the condo association is going to provide you.
Yep.
Same thing goes for the pool, tennis courts, garage spaces, and so on and so forth. So there's a lot of benefits to owning a condo. A few things to be aware of is on the negative side is what kind of managers do you have? Because a bad condo association manager can kind of change that whole perspective. Condo associations are really a great thing to be part of, but those are some things to be worried about right there, just to be concerned or be focused on when looking at different condos and making sure that you see what the community is like. What's the upkeep? Is the landscaping kept up properly? Do you see people just like landscapers just sitting around doing nothing and such? You're going to want people that are attentive. And then also pay attention to your condo docs. Condo docs is something that you're going to get from your realtor right before you purchase the property. And it's going to explain a lot of things about that condo association, and each one will differ condo association to condo association. So definitely ask your realtor for those. Read in on them, understand them, and if you have any questions, make sure to present those. Going forward from there, Mr. Agudelo, I'll let you jump into the warrantable and non-warrantable.
All right, so very simply, when it comes to condos, it's sometimes tough to get a loan if you don't have the right homeowner association, for example. A warrantable condo would be one that passes all the FHA restrictions, right? Other FHA appraisals, all whatever little guidelines they have set for all these condo associations. There's actually a list where you can actually go online and you can look up what if the condo association where you're looking to buy is FHA approved or not. If you're only approved for an FHA loan, you'll know right off the bat, hey, I won't be able to purchase there. Or it's not a be all end all either. Actually, let me step back. It just might be they're in the process of getting approved. So, or they might be able to get quickly approved. They're missing like one or two things that they can do if you're looking to purchase and they're already in the process of doing. So I would say contact them. But you can get a list right off the bat. If you want one that's already good to go, you can go on there, you see the list, and you see this is FHA approved. The non-warrantable condo, basically all it comes down to there's certain whether it be upkeep, whether it be certain units that are behind on payments. So if more than 15% of the units are 60 days late, you cannot, even though that has nothing to do with you as somebody coming in.
It's somebody else's problem.
Yeah, you wouldn't be able to purchase an FHA. Purchase that condo on a warrantable program with FHA, even conventional. You would have to go non-warrantable.
Oh wow, even conventional?
Correct. On the conventional side, now there is exceptions, and it goes case by case depending on the property. A lot of the times it's more depending on, like, for example, if it's not developed fully, a certain percentage has to be met up to that standard. Fully developed, or certain aspects of it have to be at that stage. So again, it's all very case by case, just like just about every aspect of the loan is. So I would say speak to your loan officer, me, or whoever else you may be working with out there, preferably me. But yeah, speak to your loan officer and see whether or not that's something you should go through the hassle of even putting an offer in for, or knowing like, hey, you can put this offer in, but XYZ has to happen, ABC has to happen. If it's not like that, you will not be able to purchase this condo, or you would be able to purchase only through our non-warrantable, or what have you. We do have a new non-warrantable program though. It's great. It gives you an opportunity to purchase a condo that you wouldn't otherwise be able to. And of course, details on that are all case to case as well. So as always, if you have any questions or whatever, give me a call, shoot me a text, email. And we can get into that, sit down and see what we can do. All
right, and that's something that you guys should also be aware of as well. Not all lenders, not all banks actually provide loans out for non-warrantable condos. So there's a very few out there, which is the reason why we want to put this in front of you.
Because it's a bigger risk to the lender doing it that way, and North Point is willing to take on that risk.
Right. And so now you guys have a point of contact if you ever do catch yourself in that situation where you need a loan for a non-warrantable condo. So
absolutely.
Thank you.
So going on from there, I'm going to give you guys one last bit because I always go through this bit after Agudelo and myself speak. Current market. Just got the updated map of Rhode Island today. of where the seller's market, where the buyer's markets are and such. The last time that I spoke to you guys, the last updated map that I had received was for February 11th, and the new one just updated on the 11th of March, which is just a few days ago. And to tell you the truth, a lot of Rhode Island has switched over into more of a seller's market than it was before. It went from being a 2+ month inventory to a 0+ month inventory. But there's some nuances over in the waterfront areas, the waterfront zip codes, not all of them, but a certain portion of them, where they actually have shifted backwards into having a 4+ month inventory over the course, well, you guys know the formula at this point, but it's gone into more of a normal, like a balanced type of market at this point in those areas.
Kind of leveling out?
Yeah, it's leveling out. The Jamestown area, ironically, which I would expect just because of the kind of like housing that you have over in that area, has switched more into a buyer's market, a deeper buyer market. Last week it was, I believe, it was up in the 2+ month area, or like this past month, and it just switched over into a deeper buyer's market. So we're looking at 6+ months of inventory. And for those of you that have been watching, or you need to know this, these results basically are the number of homes for sale divided by the number of homes that have been sold over the past per month for the last 12 months. So you guys have that equation, and I've gone through that week to week. But just so you guys know, a lot of Rhode Island, mostly inland, is switched over to a pretty heavy seller's market. So you got a lot of houses flipping very, very quickly, and the waterfront areas are more shifting over back to a buyer's market, which is quite interesting. But to hold you guys further, no more. Mr. Then is now going to jump into helping you out there understand credit repair, or just credit in general, and also provide a little bit of extra tools and hints for you guys to understand what it takes for you to rebuild your credit. And do note that if you are looking to get your credit repaired, you don't feel like doing it on your own, you want a professional, you want someone that's gone through it a number of times before, just like you would real estate or doing loans and such. You want to go to someone that's been doing it time and time again. Right here is your guy. He's been doing this for a while now, and he's going to jump into it. Oh,
sorry, I just want to throw out there, my buyers, any of my buyers out there watching, pay attention, especially if your credit, if you're one of those people that's trying to get in and your credit may be, lower sixes, trying to get up to that 620 and be able to purchase. Pay attention, because any little tip, any little hint you can get from here might get you those extra points or faster than you expected, and get you where you need to be. So, boom.
So definitely, again, my name is Mr. Then, Millennial Business and Finance Coach. I like to think I'm a wealth of knowledge, so I like to go ahead and provide people with this knowledge. Credit is a huge aspect of it, but one way that I like to kind of explain it first is by even explaining first off what credit is and how it's calculated. So credit, obviously, it can, well, not obviously, but it can go from 0 to 850, which is pretty much nothing to exceptional. Your credit score is something that, helps you with your entire financial life. So it could be anything with, as simple as getting approved for a credit card to getting a home loan. And those things, are calculated by a formula, which is mainly FICO. Now, that's one of them, but there's numerous ways to actually calculate credit. We're not going to get into those because
what's the most common one?
It's the FICO score.
FICO one.
Yep. So that's the one all the banks use. There is a new one that they created, but banks aren't using it mainly. And no offense to the banks, but it's because it's not really beneficial to them.
What does that mean, if you don't mind me asking?
So what they have is they have better ways of essentially calculating a person's credit. Okay. With the new FICO that they came out with, but none of the banks are using it because they like the traditional FICO score. Now the FICO score, I like to think of it almost as a SAT score or GPA. As soon as you're 18, essentially you're able to get credit. So similar to an SAT score, you write your name on a piece of paper and boom, you get some points, right?
Yeah.
Same thing, 18 years old, you get some points essentially. Nothing that's crazy, but it's better to have no credit than good credit is bad credit is what a lot of people think. And it's true. But then also there's the SATs broken up into different portions. So they got the writing, the math, all of that stuff. FICO, same thing. So they have 35%, that's payment history. So, paying on time. But a way I like to kind of explain it is you're basically keeping your word with these lenders that you're gonna, pay on time. Or if it's a friend, you don't want to break your word. They're not gonna let you borrow money again if you are late on giving them something that you owe them, or you don't return that sweater that you borrowed. Another thing is in a timely manner. Yeah, correct. You borrowed it 2 weeks ago. It's been,
Yeah.
all right, a whole month now. The other thing is amount owed. So that's 30% of your score essentially. And what that is basically keeping your balances low. So you want to keep them low. You want to keep them essentially under 30% is what a lot of people, say is the magic number. I like to say 25 because it gives you some wiggle room just in case.
I tell my buyers 20. I tell them,
so, yeah,
I'm like, listen,
20.
it's better safe than sorry, right?
And the way I kind of like to, break that down is, don't take advantage. You don't want to take advantage of people that lend you things. You don't want to take advantage of people that are letting you borrow money to buy a house, for instance. They see that you're taking advantage of other people, and they're gonna be like, oh, he's not taking advantage of me.
Right.
That's a good way to put it.
And that, I like to break it down because a lot of people, they're like, okay, so what does utilization mean?
Yeah.
What does that mean?
Yeah.
Well, that's basically what it means. It's how much of that person you're using, or how much of that person you're taking advantage of.
Now, quick question.
Mm-hmm.
Now, I've heard that you definitely want to keep it under the 30%. That's the number that I've
That's
always
the
heard.
magic number, yeah.
Now, is it bad to have no balance at all?
No.
Ever?
No, not at all.
Because that's one of the things that comes...
So a lot of clients say that, and I'm like, no. If you can pay it down, pay it down.
Listen, some of the richest people I know use their cards and pay them off immediately.
Instantly, yeah.
Me, that's what I do. I'll swipe, get the points, and...
Call it a day.
Call it a day, really. Like,
do you close it out, or do you leave it open and just let it run itself dry?
Close it out, like close the credit card?
Yeah, close the credit card.
You do not want to close the credit card.
Right.
We'll get into that.
Don't forget, I'm asking, I know these answers, I'm just saying for the folks out there.
So like the next part is 15%. That's length of credit history.
Mm-hmm.
And that has a big factor as far as, closing it out. Now, it's not bad to close credit cards. You can close credit cards if you haven't had them for too long. But if you've had a card for 10 years and you go and you close that card, they take your average history, essentially, is what it is. And, they also want to see kind of like the different accounts that you've been using and how long you've been using it for. So if you go and close that card and you've been using it for 10 years and you have on-time payments on that card for those 10 years, that just lowered your score like probably 200 points.
You're losing that history.
You're losing that whole history of on-time payments, which is, again, remember, 35% of your history of your credit score is on-time payments. Mm-hmm. And then you're taking the history, and let's say, for example, you just opened 2 cards last month, and the last one that you closed was 10 years ago. It completely takes that one out, and you only got 2 cards that existed 2 months ago.
Yep.
Slashes it. And I mean, the way I kind of break that one down is not necessarily like your responsibility, but more like the relationship that you have and the trust that you've built with this particular lender. So you've gone ahead and you've been paying them for 10 months, for 10 years, and they trust you. And a lot of times when they trust you, they also increase your credit limits, which is huge because that also decreases the percentage that you're utilizing. Therefore, you just have it increases your score overall. The last part is like 10% as far as like the types of credit that you have. So that's really the diversity and how many types of accounts that you can manage. So like, let's say, for example, you have like a loan, you have a credit card, you have an auto loan. They like to see that because they like to see that you can pay on each of these things. So installment loans, which is like auto loans, home loans, things of that nature, they're loans that are a set amount and you can pay on them at each time. Whereas like credit cards, that can change. Credit cards, they might charge you interest, 18%. You're paying 18% on a balance you had from 3 years ago. That's a lot of money. So you don't want to pay 18% on something that you could have paid off right away. And that's why when you asked me that, I said, no, don't keep a balance. You don't want to pay 18. That's like paying triple or 4 times as much for something that you bought. Like if you get a house for 18%,
Oof, dude.
And people used to do that.
Yeah, it was back in the
People
day.
used to do
20%,
that.
21.
But like I heard it and I was like, what? People used to buy houses at 18% and they thought they were getting a deal.
Yeah.
Now, mind you, I mean things equate, the economy, things like that.
Yeah.
But it just didn't make sense to me.
Well, even where rates are right now, sometimes I'll show my borrowers one of the CDs, the closing disclosure,
Ooh, yep.
and it'll show, the purchase price is $200,000. Your original loan amount is $185,000, and at the end of the day, after interest and everything, blah blah, blah, you're actually paying $300 and something thousand, $400,000, and that's with lower rates. Imagine
lower
it
rates.
being at an 18% or a 20 something.
I'd rather not.
Forget it.
I wouldn't want to
You're
imagine
gonna buy
that.
like 5 houses with it.
The last part, as far as your FICO is concerned, is credit inquiries, and this is what a lot of people don't understand. So I kind of like to go a little bit harder into this, especially hard inquiries and soft inquiries.
Yeah.
Mm-hmm.
So they have 2 of them, and a hard inquiry is kind of like a hard pool of your credit. It's where they actually go ahead and find out exactly what you're borrowing and everything like that, whereas they're not really kind of hovering above and kind of just... It's almost like the 3 of us are friends, and
Don't associate me with that guy.
and somebody that we both, all 3 of us know, asked you for $1,000, and then they asked me for $1,000, and then they asked you for $1,000. Now we all talk, so we're like, okay, hey, you heard of Jimmy? Yeah, Jimmy was asking me for $1,000 the other day. Then you mentioned, yo, Jimmy was asking me for $1,000 too.
Yeah, I don't know why he's asking me for $1,000 too.
Yeah, I don't know if I'm gonna let Jimmy borrow that $1,000. Yeah, me either.
So then that's not yet.
So the way the banks see it is they see it as you being almost thirsty or desperate to borrow. If you have way too many requests to borrow money at a particular time, they're not gonna let you borrow the money. It looks like you're out there begging for money. You're asking everybody and their mom for money. They're not gonna let you borrow it. And then the thing about soft inquiries is that it's usually banks don't see that. Maybe you know a little bit more about that, but it's something that doesn't affect you as severely. So, but whenever you're doing something big, they're always gonna do a hard pull. So now, in regards to, for example, the mortgages, right? I know when we do a pull, we see everything, the whole 9, but then if, for example, somebody checks with me, then they go check with somebody else, then they go check with somebody else, what ends up happening, from my understanding, the way it works is, for the mortgage, you get, they kind of let you shop.
It's not going to lower your, let's say I pulled it first, your score went down, 5-10 points, something. It's not nothing crazy, right?
Yeah.
So let's say it went down 3 points after that. Then what ends up happening is, you go within like 60 days, you go to this place. They're not going to keep going down 2 points.
And that's actually the same thing. Typically with auto loans, unless they go and they check a bunch of banks, which some of them do.
Yeah, some of them do. Yep.
But the thing about it is that with them, the credit agencies understand that people are kind of shopping around and getting better rates. So that's why they'll allow for things to
correct. And it's all based on when it is too, right? Like if I did it now and then 5 months from now I do it again, it's a different story. I'm not rate shopping at that time.
Exactly, you're not rate shopping.
It's a whole new hard hit.
So it's a whole new hard inquiry. Now another thing a lot of people get confused is like the credit report and your credit score. So the report is something completely different than the score, because the report is actually a document. It's comprised of your history, your address, a bunch of things. So like, bankruptcies, anything like that might have to deal with you. So like if you were to think of it in another way, I mean, I don't like to, but let's say, you got locked up and they got your criminal record there. That's basically your report. Now the credit score is comprised of your report. So it's comprised of the information that's on the report. So like payment history, things like that. It's a score that they come up with that takes a piece of all of that and puts it together into something that they can grade.
It's kind of like looking at the test where you have all the rights and wrongs, and then the actual test score at the end of the school year.
Exactly. Yep. It's GPA.
Yeah.
Now, it's a fun.
Entrepreneurs don't talk about GPAs though.
No.
We don't talk about GPAs.
I mean,
at least most of us.
It's because there's different ways to
learn.
Not only learn, but also be efficient. You don't have to, get 100 on a test, which, I was great at testing. But the thing about me was that I was, I listened in class. I didn't like doing homework and stuff like that. But I listened in class and I...
That was me.
Yeah, and I went ahead and absorbed it. And then when it came to taking the test, I did well in it. Because most of the times, and this isn't all the times, most of the times the teachers will tell you what they want you to learn.
Yep.
And what will be on the test.
Some of my teachers are on my Facebook.
Okay.
That's exactly what they would tell me all the time. Like, dude, you know what you're doing. You're getting like the 90 or the 100 or whatever on the test. Just do the homework. Stop being lazy.
Oh, my foot just fell asleep. Goodness gracious.
Don't fall in the middle of the video.
Nah.
I'm not cutting that part out.
I'm not cutting that out.
This is like if we went live.
This is how we do. This is the live video without the live.
Yeah, that's fine. What was it?
So.
Oh, yeah. So, we went ahead with that, and with the... I guess now I can get into kind of like the credit repair aspect of it. A lot of people don't know that, 8 out of 10 people actually have errors in that credit report that I mentioned earlier, and that affects your credit. So, if you've gone ahead and you've moved around a bunch of times and they have the wrong address, or your name was spelled incorrectly, or, you went ahead and... had your cousin take out a auto loan in your name and they never paid their car off and that car got repossessed. That all affects your credit. It's you. And even if obviously if it's something where somebody stole your identity, then you can go ahead and dispute that. But otherwise, all that information is correct. So you have to know how to legally get these things removed from your credit report so that you can do better in it. You think about it this way. And I like to go back to the example of GPA and SAT because it's things that are very similar in the nature that they work. Mm-hmm. When you go ahead and you get an F on a test or something like that, or even a class, it lowers your GPA substantially.
Yeah, absolutely.
Now, in order to build that up, you know how many A's you gotta get in your other courses? Mm-hmm.
It's always easy to drop it. It's not easy to pick it back up.
Exactly.
Yep.
But that doesn't mean you can't, and it doesn't mean that there isn't ways to fix it. So, for instance, I think there was a class in URI that I had taken, mm-hmm. and I had gotten an F in it.
Oh no.
Yeah, horrible.
We can't have people who get F's on this video.
I got an F.
See you guys
later. But let me tell you, there was a way to fix it.
Mm-hmm.
What did I do? I went and I spoke to the teacher, mm-hmm. and then I spoke to the dean. And they were able to allow me to take that course over and replace that grade
mm-hmm.
with the new grade that I got. And guess what I got?
An A?
I got an A.
Attaboy.
I took it with a different teacher because the teacher that I took it
blame
with...
it on the teacher.
Yeah.
No, I'm just kidding.
The teacher... He wasn't that he was a bad teacher. It was just chemistry.
Yeah.
And we didn't have that. We didn't have that chemistry. No, we didn't have the chemistry. The class was chemistry, but we didn't have the chemistry. So it's ironic that that's the case. But it just didn't work. And then I took it with another teacher over the summer, and I got a fucking A. Whoops.
It's all right. We're all adults.
I'll bleep that out.
I don't have the bleep ability, but that's cool.
All right, the bleep ability.
But that's how that worked. And the same thing with credit. There's a lot of things that you can do as far as repairing it, and you can do this on your own. But again, it's complicated. It's tedious. There's things that you can do, like the Fair Credit Reporting Act protects you as a consumer. Credit bureaus, they don't work for you. They don't. They work for the banks. Their clients are banks, because banks are going at...
He's pointing at me this whole time like I'm the bad guy, guys.
He's not a bad guy. I'm just saying they work for the banks.
They work for this guy.
They work for him, man. And you happen to be here, so the thing is they work for them. They don't work for you. But the thing that you can do is you can make them fix what's wrong with the system, which in turn helps you with my boy right here.
Right.
Because if you have a lower interest rate, you're paying a lot less for that home. You're paying a lot less for that car. You're paying a lot less on that credit card. You know, if you have a 12.99% annual percentage rate on a credit card, as opposed to the 21 and 23 and 24 that people are getting approved for now, which I think is ridiculous. But that's what the rates are. Then you're saving a lot more money if you do pay interest on it. Now, like I said earlier, I don't recommend keeping
just
balances.
Pay
just pay it off if you can.
Absolutely.
And, you know, a good habit to get into is to go ahead and, you know, think of it as like your debit card, an extension of your debit card. You know, you're going ahead and you have a particular limit. Make that limit 30% of whatever the card is. Mm-hmm. You spend up to 30%, you pay off up that 30%. And that's it.
Okay.
I have a question for you.
Yeah.
So backtracking a little bit, what you were talking about with fixing stuff and the whole nine.
Yeah.
So I've had a client recently that asked me, their bankruptcy is coming off. It's hitting that 7-year mark. Okay. When that happens, what happens? Do they need to do anything? Is it gonna, you know, whenever the credit?
It's always good to double check. Because although it might say that it's going to fall off, I've seen people with things on their credit report that have been on there for like 14 years.
So that's where someone like you comes into play, right?
Yeah, you have to get it deleted.
So let's say, for example, you call and you say, hey, I have, you know, if let's say that's the only thing they need to take care of. So they give you a call and say, hey, you know, Carlos, this is what I need to do. Yeah. And you would be able to facilitate that.
Yep. So essentially what happens with that particular process is it's letter writing. So, I mean, you can call, you can do it online, but with credit bureaus, the tediousness of it all is what is effective. So if you want to get something done and you want to get it done right, write a letter.
Okay.
Yeah? Right. Write that down. But let's say, for instance, if it was a scenario where somebody had an old bankruptcy on their credit report, and it's still showing on there, well, what they need to do is they need to go ahead and gather their credit report, so actually pull their credit report.
Yeah.
Print out the whole thing.
Yeah.
Circle the things that are wrong with it.
Yeah.
And then actually write a letter and send that along to every credit bureau, which there's 3. There's Experian, there's TransUnion, and there's Equifax.
Yeah.
And in doing so, they have about 30 to 60 days essentially to respond to that. Now, if they don't respond to that, you can file a complaint against them, and they get fined every time there is a complaint
against them,
and it's not resolved.
Okay.
So they have 60 days to respond essentially, and if they don't respond, guess what happens?
You get a little money.
Well, they have to go ahead and remove that from your credit report.
Oh.
But that sounds nice.
That's better than money.
I would take the money actually. Because the fines are huge.
Yeah.
So I would take a percentage of the money. You can give me any percent. So they don't like getting complaints and they don't like not responding to them.
Okay.
But if they don't, that's their mistake and they have to remove it.
Yeah.
Now, if you go ahead and you do get that letter back and it says, no, this is accurate, such and such, blah, blah, blah. Or they'll send you a letter and, okay, we removed it. If they say it's accurate, okay, well, show me proof. That's another letter you send. If they can't show you proof, guess what they have to do?
Remove it.
You have to remove it. So there's a lot of things that protect you. And the thing is it's not, the Fair Credit Reporting Act is not about what the banks or the bureaus think is fair. It's what you believe is unfair or you were taken advantage of, or, you know, it's made to protect you as a consumer. So let's say, for example, you had some student loans and you didn't understand how the student loans worked.
Mine are all paid off.
That's good. Congratulations.
Right. All 75 grand.
Wow, wow. God bless you.
I lucked out.
Yeah.
First, that's where it's one of the few times that a single family home can actually be an asset versus a liability. I built up a lot of equity over 5 years owning my first home. And it ended up paying off my college loans in one shot.
That's awesome.
It's going to be hard in this market right now, from what I understand, from what we're seeing. But if you do things right, you make money when you buy. So buy low and put in some work and sell high.
Yeah, huge.
I'll let you keep doing your thing.
No, it's okay, man. We're good.
Side lesson.
Those lessons learned. I like to say, you know, you learn and you remove the L, which is the losses.
And you earn.
That leaves you with earn.
Bang.
Bang. But I mean, one of the things too that like a lot of people have kind of fallen into is, you know, they go into student loan debt and then they can't pay those student loans. And, you know, you can't claim bankruptcy on student loans.
Yeah.
Just so you know. Which I don't recommend claiming bankruptcy. It stays on your report, like you said, for like 7 years. And then you're starting all over, essentially. And honestly, it kind of still stays there as like a little side note that people see and kind of try to ignore, but they see it anyways. And
when the bias kicks in, we'll have it.
Mm-hmm. So what's important with credit is like, you know, I don't want to just, with me, for instance, when I'm repairing credit for somebody, I don't just do it for them. I actually help them learn how to do it. But also in doing so, I make it so that they're not going ahead and making the same mistake again. Because I can fix something for you and say, all right, have a good day.
Me, sorry guys.
But then next thing you know, you mess it up again and you got to come see me again. And that's not of value to you.
My recording's been done then, huh?
Yeah. Yours shut off a while ago.
Oh, wrong, for real?
His did. Mine's
Okay.
good.
All right, cool. Well, I mean, nonetheless.
Let me just take this off then. Go ahead, guys. Sorry.
What else can I talk about? Oh, yes. So,
There's a lot of information for people. This is really good.
I mean, there's so much. I can talk about credit for hours, but, you know, I'm not going to take up that much of your time. So I'll kind of leave it with one last tidbit as far as, like, you know, repairing credit. And that's one of the things that, you know, if you really want to do, you can get your credit report for free from annualcreditreport.com. A lot of people don't know that. You can get it once per year for free. Otherwise, you do have to pay for it. These credit bureaus are for profit. They don't work for the government. They are owned. I wish I knew who owned them, because then I'd figure out if they're, you know, how much money they're making.
Right.
But, and I'm sure it's public information, but I just never thought about looking it up. But, you know, there's things that you can do to help, you know, fix your credit score. And once you have credit at a level where it's beneficial to you, you can do so much with it. Like, you know, I like to think of, you know, the game of chess, where, you know, cash is king, they say. I like to think of credit as queen. And on a chess board, you can make a lot of moves with a queen, but you always have to protect your king. So you do things like this, and and you can make these moves with this credit, which is the queen, but you have to do so the right way, because if you lose that queen,
yeah,
that game just became a lot more difficult.
It's a nice analogy.
So
that's good.
I got a lot of those.
Good. Wealth and knowledge.
You can write that one down.
I
like that.
Oh, I'm actually coming out with a book too. I'll let you guys know
coming
about
out
that
with
a
the
little
book,
bit more.
Fix the hat. Yeah,
Yeah, so-
Did you wink too?
I probably did. I usually.
I think I seen a wink in there. That was good.
I might have like, you know, snuck it in there a few
That'd
times.
be good for a cover photo. Yeah.
But yeah, I mean, I guess that's what I'll end it off. I don't want to kind of.
No, it's cool. Because we're gonna be doing this again, and we appreciate having you.
And if they have any questions, you know, definitely let me know. I can get into detail.
Well, I'm gonna have.
It's just I wanted to kind of give a broad.
His business card, because I'm gonna be hooking you up with my buyers.
Hey,
left
listen,
and right,
my
so.
business card has no limits, my friend.
Oh,
So
nice.
you can take this and use that
I'm
anywhere.
gonna try to swipe it. See how that goes.
You could try. It has no limits. So.
It's nice. I like it.
It's cool, right? So for those of you out there that are watching, I hope this was very informative for you. I know that I learned a thing or two, and I already have pretty decent credit, so that's actually awesome, because maybe I can actually get up into that 850 marker one day.
My friend's up at 800 now, and he's like, I couldn't have done this without you.
Man.
And I was like, I mean, I
My
didn't do
man.
much, but
No, but so
Knowledge, man. You know
It's-
what to
yeah,
do. You
it's
know what
true.
it is. That's the thing.
yeah, so if any of you are out there that are in a credit problem, you're looking to get your credit repaired, you need to do some work, you don't know how to do it, maybe some of this may have clicked for you, you want to do it on your own, you got a guide, but other than that, if you need help with this is someone that you can turn to, and as you can see, wealth and knowledge, and this is just one of the things that he does. We're going to be bringing him back on to do more of these videos. Did you have any questions for the raffle? Well, for the two objects right here that you want to ask everybody, to see if whoever puts down the right answer first, we'll get that out to them?
yeah, sure. Just one.
Just
I'll
shoot
do
out one.
Yeah, you can do the other one. Okay. What
Right on the spot.
is the capital of Israel? No, Israel's not a country. Huh? I don't know. I hate geography. I don't know why I did that.
We're gonna put the questions in the comments.
I don't know. You think of a question.
And
Put me on the spot.
No,
This
it's fine.
is
It's fine. So
We
got
got just like live.
This is just like
oh yeah, we're
'cause I'm
posting it
not-
up that way.
I'm posting it up just this way. I love this. So we got two things here. You want to talk about these a little bit?
Yeah, so I have a bunch of companies. I like to think of myself as a serial entrepreneur. I have a social media marketing company. I have 2 e-commerce stores. I'm an affiliate marketer for Amazon as well as a few different other companies like Clear and God knows what else.
The moment that you actually forget some of your jobs.
Yeah, but I get money. The thing is that it's residual and
Yep.
it just comes in, and I just literally just put a link out there and it gets me paid. So there's a lot of ways to make money. By the way, if you guys ever need any help with figuring out how to make money, I'm a business and finance consultant. The first thing I do is I help you get your finances together. That's my main job, I guess you could call it. And then I show you how to make more money. So this is from one of my websites. It's called thenproducts.com. It's just a purifying peel-off mask. We have a variety of products there. It's just an online variety store. You can find anything from apparel to jewelry to little trinkets like this. And then this is something fun that I created. It's called Pizzalito because I love pizza and I love empanadas. So it's an unlimited pizza and empanada or pastelito.
Yeah.
Pastelito party where there's also beverages. It's for adults, obviously. As far as liquor and hookah and things of that nature. And it's unlimited. So you get to eat the food unlimited, and then obviously you pay for the drinks if you want them. But it's a nice gathering. People have fun and they enjoy it. So
When's the next one? Do you have a date?
I do have a date. It's actually on 420.
Uh-oh.
So
That's gonna be an interesting night.
He's definitely trying to
Yeah.
get rid of pizza and patelitos. Right
So
there, let me
you
tell
know, it's gonna be unlimited pizza, unlimited patelitos, and we're gonna have some more information on kind of the details.
Where can they find that?
Just follow Pizzalito PVD on Instagram or on
Oh, is
Facebook.
that you?
That's me.
Oh, I think I got like a follow some time ago from that, and I ignored it because I was like, I don't know who the heck this is.
That's
I'm
who
gonna go
it
and accept
is.
it now.
That's all right.
I
You don't have
threw
to
myself
ignore
on
it.
blast.
That's okay. And then I mean, there's other things. My social media company, Smooth Social Media.
What do you guys do there?
So we grow mainly Instagram, but also Facebook and other social media following, as well as engagement, create leads, things of that nature. We have a variety of packages as low as $65 a month
Nice.
to high up echelon with
Yep.
search engine optimization and all that fun stuff that nobody understands.
Cool. So once again, everybody, I'm gonna help wrap this up right here. As you can see, a lot of different points of contact in just one person right there. You guys need social media help. You're looking to start a business. You're looking to become a social entrepreneur just like him. You're looking to write a book. You're looking to get your credit repaired. I mean, you name it. You got answers right here with Mr. Then. Definitely look him up on Instagram at Mr_Then, THEN, just in case the accent comes out a little bit. You got Mr. Agudelo over there. That's Jonathan Agudelo MLO on Instagram, and on Facebook it is Jonathan Agudelo MLO again.
Correct.
And then for us, it is we've actually extended our platform some, so we're on Facebook, Instagram, YouTube, and Tumblr and Twitter at this point. So everything is Bolano.home, and if it's not there, then you go Bolano_home, and if that doesn't work, then just type in Bolano home. So if you're trying to get in touch with us, we're going to put the extra information in the description. I'm going to give all of his information in the description as well, and Mr. Agudelo, once again, will be there too. Make sure to leave your comments underneath, and we will check in on this, and if we'll try to answer everything the moment that it comes in. And other than that, thank you for joining.
And this is going for the shares as well. Share the video as well.
Yes.
It wasn't live, but we
Doesn't
recorded
matter.
it as if it were, and it's being shared to enter you into the raffle still.
Yes.
$250 Amazon gift card.
So Q1 is going to be episode number 1 to episode number 12. So as long as you share one of those, doesn't matter if it's before, after, or during, we're going, and it's impossible to do before unless you...
I just thought that. I was like,
I was like, wait a minute, what? But seriously, we're entering all y'all in there. So whoever wins gets that $250 Amazon gift card. And you guys can go look at who the last winner was and what she ended up purchasing with that card herself. So once again,
I think I saw that one. It was another gay sister or something.
Yeah, yes, it was. Next, put it back out there again. Yes, it was my sister.
Yeah, that's good. So,
well, she was sharing.
Yeah,
She was sharing.
That's what it was.
Support.
see that? See that? So yeah, once again, thank you. We love you guys. Like us, follow us, subscribe to us,
And comment.
We will see you guys next Wednesday.